All right. Good morning, everybody. So we made it through. We're on the other side of NVIDIA and muddy water, right? The earnings weren't horrible. They just didn't meet expectations. Had a little bit of a sell-off, and the markets have already diverged from that. Decoupled, diverge. There's a lot of different terms used for this, but we've seen it before, right? When NVIDIA has been down. I think it was back in 2023. NVIDIA had a hard time for a little while, and the markets decoupled from it until it settles down. That's not a bad thing, right? It frees us up. What I'm looking at right here is the open interest in the SPX, right? And this big one is 6,500, and it looks really big, but we got to put that in context. 63.92 is the flip point. That's a cog line, by the way. And the market closed at 64.74. Now, this looks big until we zoom out a little bit and look at what's below us. This is 6,000, right? So in comparison, what we were looking at 6,500, while it seemed really big, as nothing compared to what's underneath us. I mentioned the other day that what was resistance over our head or what was guardrails kind of around price, helping keep us balanced and centered, it's gone. That we can move to the upside now with something more like a magnet rather than something that is like a wall or a resistance level. 6,500's on the table easily. We should be able to get through that. And then there's really nothing in the way until we get to 7,000, right? So I'm not saying we're going there, just that we've had this options structure around us really holding us back and stopping us from going anywhere, and kind of contributes to the sideways activity. Yeah, 7,000 today. Well, that would be wild, wouldn't it? You could feel it in your bones, huh? I'd say you're just gassy. Probably need to drink another cup of coffee. Markets are, yeah, yeah, the Baileys, good stuff. Markets are kind of waiting on nothing, right? We have employment info today, and we have a little bit of inflation data today. GDP is the biggest one on the table for me today. And then tomorrow, core PCE, I believe. We also have some Fed speakers. Goolsby's going to be so late in the day, it won't even matter, right? That's 7 o'clock tonight. Williams will be speaking around noon. We got ISM services, PMI, jobless claims, the ADP employment. And look, make no mistake about it, the unemployment stuff, that you want to pay attention to the job numbers, right? It's what finally got Powell's attention for the cuts. It's what he highlighted himself. It goes to the heart of the Fed's dual mandate. You want to pay particular attention to anything that has to do with job numbers. And this morning, we're going to get job numbers. But on the other side of that, what I think today is going to be important is the GDP numbers. Now, this tends to slip by people, right? Especially when they do forecasts and revisions, and it'll slip in just nice and subtle in the middle of the day, in the middle of a week, and move markets where everybody's saying, what the heck was that? Why did the market move? And then we go and look, and we find out that there was some recalculation or some new estimate of GDP numbers that came out. This one today, I think, is the biggest one on the block, but all of these put our morning at risk for big moves, right? So at 8:30, we're going to get some data, and then at 10 o'clock, then we've got front end auctions to deal with. That'll get us through till 1 o'clock. The afternoon should be fairly clear, other than, anything that comes out of the administration. You can see Europe's over there. European Central Bank is rattling its cage this morning. I went ahead and reactivated my stockcharts.com account. I haven't been over there for a while, and my Seeking Alpha finally expired. The year's up. So I've reactivated that. You'll see more stockcharts.com charts now. I miss those. There's some really good tools that they have over there. It's not a day trader's platform for sure, but good for everything else. So at NVIDIA's earnings last night, we got these two really big bars, or I should say, depending on your time frame, one really big bar. This bar is what I've got highlighted in that cloud right there. It's what we tested against this morning at 4 o'clock. We broke through VWAP, so we're looking for reciprocation now on the other side. Whatever we had up here, we would look to get down here. That kind of lines us up on that 64.87. But GTFO, we have to get out of this box, right? There's just no other way to say it. And it always is that way. Every day, every morning, we go through the same steps. If you're looking for a tradable trend day opportunity, then, get out of the range. And the range that we have always starts with our own Globex. Then it focuses on yesterday's price action. So now we got two boxes, the Globex and yesterday's range. Now we're using all of yesterday, and we don't always do that, right? If the RTH of yesterday is narrower than all of yesterday, then we would use just the RTH first. Then we would focus on all of yesterday. But the RTH yesterday was bigger than the Globex, so it's just a one-shot deal. Don't need yesterday's Globex by itself. So this is the current box we have to get out of. To the upside, it's basically the same level. Get above that 65.5 and make a run to the upside, 65.11 and whatever else we have up there. To the downside, get through our own Globex low, which is like 64.70. We can test yesterday's low, the volatility trigger. It's also the 10-day moving average. We get below that, we got the 20 period and 64.32 cog line down here. It's not bad. From 64.60 to 64.30 be a nice play. It would put us underneath the 3-week moving average also. And it would be the low on the week. That would line us up with Tuesday's low, or the overnight between Monday and Tuesday. That'll line us up really good down there. That's 64.32 cog line is what we flipped on back there. So it would work out really nice for a downside move. The thing is, there's really no reason to be looking to the downside unless the numbers we get this morning shake investor confidence, right? If the markets get a little skittish this morning on the first set of numbers, then we could probably see that happen. But otherwise, no reason to think we're headed down there. We've got 53,000 in the overnight. That's not the best we've had this week. We had 58 on Tuesday, but still it's in the 50s. It's fine. There's not a lack of liquidity. The markets didn't melt into oblivion on the NVIDIA earnings. Global markets didn't crash, right? You know what I mean? Like, everything's just fine. There's nothing wrong. But we got to move on to the next situation, and that's putting us back with job numbers and inflation data. So we are forming a bit of a compression wedge here. It's not as clean and pretty as we'd like, but it's basically a flat top with higher lows, all things considered, right? I mean, technically we did get higher on those wicks, but want to consider that as a flat top, and it goes back to the August 11 time frame. This whole thing is a zone or a range that we haven't been able to get out of yet. Just bring that down a little bit more. Every time we get into this 6,500 zone, we get right back out again. So higher lows, equal highs, we are forming a wedge or a compression. It will come out of this with gusto. It's very likely that the move will look a lot like Friday's move. It'll be a big bar. Doesn't have to be green, right? Green, red. It could be a big wiki bar that has, big trails on each side. The idea is compression leads to expansion. So if we've been compressing and compressing and compressing, eventually we're going to expand. You could run that with collars, straddle, strangle, right? You could do a gamma fly if that suits your needs. It's just like putting wings on a straddle. Whatever works for you. One of the things they kept hyping up this morning is the amount of stock buyback that has been announced this year. We hit new levels earlier in the year than we've ever hit before, right? There's just like unprecedented level of stock buybacks this year. There's still a lot of reasons to say that this bullish exuberance in the market, it just isn't done yet. Is it overextended? Oh man, yeah. I posted a CTA chart earlier with the NASDAQ, and I mean, it's extreme, right? Just CTA positioning. It looks like a rocket ship taking off. It's nearly a straight line to the upside. I remember years ago when I was working in the oil field, we had to move often, and I went to get another vehicle as if I didn't have enough, and they said, based on your income, your credit's a bit high. You're getting a bit extended. Oh, well, yeah, but look how much I make, right? Like this isn't a problem. They're like, well, we don't really like this ratio. If they applied the terms of credit to me, if they did that to the government, it would all just implode, right? Talk about mismanaging funds. Oh my goodness. That phrase, you have no business having business, that's the government right there. They can't manage jack. And the idea that they're getting into MP and Intel and goodness knows who else, and that they're going to start messing around with companies, it's all downhill from there, bro. 64.92 cog line is what we're resting on this morning. We're basically flat, so we have no edge towards either side this morning. Even the idea that, one would be inside day or not, nope. We got to get an inside day breakout to hit either side today. Now, one thing that I always like to focus on is, did it open in an exaggerated model to the downside? Because that'll shift one edge or the other. And it really didn't, right? It's balanced on 64.87's close. And then we opened up there as well. Didn't really have, a big gap down, which would have shifted these lines drastically lower. So it's pretty balanced where it is. We need an inside day breakout to get to either edge. It doesn't owe us a breakout today, by the way. It doesn't owe us anything. We made it through the big hurrah on the week. We didn't crash and burn. Markets are happy with that. We could go the rest of the week just maintaining what we took on the week. I don't think that's the way it's going to go, but it's certainly what we could do, right? Now that we're done with NVIDIA, we don't have to run, is the takeaway. We don't have to sell off. We don't have to break out into new highs. We're coming up into the end of the month. We're getting into the after Labor Day part of the market cycle. We could see window dressing in the next few days. We got a short week next week that's going to mess with stuff. And it wouldn't surprise me at all if we just finish the week like giddy little pirates, keeping what we took and giving nothing back. And if that's the case, then we should close the week between 64.50 and 65.11 cog line. That's a 60-point range. It's not that bad. And it would make for a nice end on the week. And it keeps us inside of last week's range. If we come out of last week's range, then we still want to focus on that previous week, right? That August 11, and it's 65.11. So it's what I had already mentioned. We did get an MDP yesterday. We net pivot is higher than yesterday. That's bullish. Price opened above it today. That's also bullish. We've already hit it. We've gotten that out of the way, and that's also bullish. Now, I just snapped a trend line there, and we could see that we've already broken the trend line, and we're not really putting in, decent swings back to the upside. We're just working our way back down, back down, back down. But keep your eye on the clock. If this continues to fade, we're going to expect to get back to the floor pivot. The channel's really narrow, which implies if we break out, we could actually run. Just keep in mind that this channel doesn't make us break out. It doesn't make price do anything. It's just giving us an idea of if we was to break out, what's likely to happen. It's likely that we just keep running. All of that resistance that we've been talking about at that 6,500, 6,511, it's gone. Right now, the 6,500 talk is for the SPX. So, keep the context there. We got 64.81, and we're talking about 6,500 not having any resistance there anymore, or buffer or anything like that. We got like a magnet sitting up here now, and it's very likely that we can just go right on up there and get it done. So 6,500 in the SPX is what Spot Gamma has been talking about. But for the ES, this is the level that we've got to get through, that 6,500, 6,511. Every time we've gotten up there, we've just been rejected, and it wasn't done with a lot of volume, right? Remember, we talked about that yesterday, looking at the volume profiles. We've basically hit R1. It's not good that we got that close to it and we dragged away from it. That puts S1 and S2 on the table at 64.61 and 64.37. It's also a failed inside day breakout against that high. It didn't give us a 111 or a 1236, so I would have liked a little bit more up there, but I guess it's just based on what you measure. If we ignore that big swing bar from NVIDIA's earnings and we just mark the high of yesterday and snap it, then we did get a 111 breakout this morning. That's the perfect reversal, right where it should be, and we've faded away from it exactly as we should. So that works out perfectly. We just have to ignore the earnings data, right? It's not uncommon to do that either. So with that in mind, if we count it that way, then R1 is done. We've got a perfect pattern reversal off of the high, and we have every expectation of hitting this floor pivot. And if that doesn't hold, then we have S1. If that doesn't hold, we have S2. Step by step, write it on down. The base case argument, though, is that the floor pivot holds and that we maybe test our own Globex low, which is like yesterday's low, and that holds. And we just, maybe wick out, get a 111 down there, come back in, hold the line, and stay happy little pirates again. So no change here. 3 levels of point of control up here. Lots of distribution across that high, 64.50 up to 65.11 cog line. That is the big playground that we're in. And nothing changes unless we break 64.50. Then it gets shallow, tightens back up around 6,400. We've got multiple structures there, point of control back here, and value area here. below that kind of gets a little weak, but 63.50. We've been running 50s for so long that we've got a lot of structure at those 50s on the way back down. There's just no reason to think that 64.50 would fail us at this point. Day 30-minute volume profile and TPO, they're the TPO looks a lot better. It's a classic P shape almost. Got a good clean distribution up here. I'd like to see that value area get tightened up some. Maybe the lower edge brought up into 64.50 or 64.60. But that's just nuance. There's really nothing wrong with this profile. For the other one in green, the volume profile, we still got a lot of work to take out. So we need another week to get to these candles here in the middle. Otherwise, we're taking away from the volume where we are at, right? So we're putting it in on the right, but we're taking it off on the left. And so we're not looking to see that point of control redistribute itself at all. We expect it to stay right in this zone because it's where we're at. We do not expect to have a new point of control unless we break down and revisit this low again, that 63.60, 63.80 area down here. That would bring that point of control down likely by Wednesday or Thursday of next week. But it's a if then, right? So if we even got down there, then we'd expect it. Otherwise, we're looking for a new home. And there's nothing signaling a bunch of sellers up here, right? Even on this time frame, there's just, it's so shallow up here, there's nothing. We didn't have a lot of sellers up there smashing it to the downside. We just ran out of buyers. The difference. No VPOC from yesterday, and today's point of control so far lines up perfectly with yesterday. It would be worth your while to mark yesterday's point of control. It wouldn't be a VPOC, right? It'd just be a point of control. Most of the textbooks will tell you to do that anyways. Just carry forward yesterday's lines into today's trading range. You have the value area high, value area low, and the point of control. But it's 64.92. It's a cog line. I don't need to mark it because I already keep track of cog lines. Keep track of that 64.92, right? As long as we're near it, we can cross back and forth above and below it. But if we expand away from it, like we did here, and then we come back into it, it's likely to act as a support level until it fails, right? Then we fade to the downside. If we come back at it, it's likely to act as a resistance level. 64.92. They put in a lot of work last night, right? In that open session. And still checking those highs, we just ran out of buyers. We didn't have a bunch of sellers. I went back for a minute because I seen this right when I was getting ready to leave. That was a lot of sellers. That's what it would look like. Not this, where it's really shallow and we ran up there and just faded away again without getting a big footprint. Okay, see the difference? Yeah, you like it. We're still a 0.5% above the 10-day. Nothing wrong there. And of course, since we haven't gone anywhere, we're not overextended. We're not overbought. We haven't done too much. We haven't gone too far. It does not owe us any sort of mean reversion or pullback. On the weekly, we're still just fine, less than 2.5%, sitting good, having a nice gentle fade back towards the 10. There's nothing wrong with this market. Trend is still intact. It's still healthy. It's not overbought. It's not overextended. We're good. The VIX is down almost 3%. The Mag 7 up volume is down. Yeah, I know. That just sounds weird. China's KWeb group is also down. And really, that's it. I mean, chips are down, but not enough with tech, and also not enough. Barely down. I like those barely down kind of mornings, right? I'd rather, try to get long on lows off a pullback than try to get long on, you know, being up 1% and breaking out on the day. I hate buying breakouts like that. I'd much rather, try to get long off the lows. Just like the t-shirts say, right? Buy low, sell high. Looking at what's up this morning, got Bitcoin, more Bitcoin, and then a little bit of Bitcoin. And Mag 7, which is odd because the Mag 7 up volume is down, but the Mag 7 is up. That'll twist your head a little bit. Cloud computing, and really that's it. It stops at cloud computing. The rest of these aren't up enough, but we have ones that we want to see working in the right direction. We got financials this morning. Always good to have financials with us. They just need to put in some more work. And Bitcoin is our gauge on risk, right? So seeing Bitcoin up, especially across the spectrum, that's really good for the idea that we could get a risk on day, a breakout day, and a run to the upside. But by itself, that's not enough. So we need chips to come back around, tech to get into the game, finance to participate more than 0.25%, and we can get our rally day. Every morning when we're looking for could today be a breakout and a run day, we are always trying to define, well, what's going to be the catalyst or the fuel that feeds this move up or down? It can be options, but we don't have the options in the pre-market at this time. So if that's going to be the catalyst, we would never know it this early in the morning. Then there's commodities, oil, gold, precious metals, treasuries, dollar yield, FX markets, US dollar Japan, volatility metrics, VIX, VIX futures, inverse VIX. Each one of those categories has a capacity to break us out and make us run, or assist us with a breakout and a run, or trigger the breakout and the run. And then there's just broad market breadth, like Mag 7 and having the 3 sectors of risk on fueling the drive. So far this morning, we've got Bitcoin. That's one piece. That's great, but it's only one piece and it's not enough. So we still need tech, chips. Tech is too vague, right? Cloud computing, chips, old tech, hyperscalers, Mag 7. So we need those guys. We need financials, consumer discretionary, and we don't have it yet. So once we get into the open, keep your eye on the broader market breadth. How many names in the S&P 100, how many names in the NASDAQ 100 are moving to the upside? How many are moving to the downside? That's breadth. It's advancing versus the declining issues. ADD or ADSPD. If you're on Thinkorswim, use this drop down arrow and then scroll over to where it says indicators. This isn't like stochastics and MACD and RSI. This is market breadth indicators. NASDAQ up volume minus down volume, or, the ADSPD that I mentioned, which is, all the way up here because they're alphabetized. There's the ADD, the NYSE advancing minus declining. There's the S&P advancing and declining. These are all market breadth indicators that you could use. Any one of those would be fine. Stack them up, use all of them. It wouldn't matter, right? Just kind of get an idea of what's moving today. Where's the market breadth at? I tend to use the ADSPD and then the ADNDD, right? That's the NASDAQ 100 and that's the S&P 500, because they don't have a market breadth tool for the S&P 100 that I could put here. If they did, I would use it. So I use the 500 here, the NASDAQ 100 here. If you want to go through Market Watch, then I really like going this way. I think it's a much better market watch for the advanced decline. Set it to index, and then of course now you can choose the S&P 100. You'll get the issues. Yeah, you got issues. Advancing minus the declining, then you'll have the volume plus the capital. So you're able to see the money flow. And if there's any divergence in that money flow, it stands out. This won't work until the open, though, right? So you don't have that in the pre-market. And it's stackable. You can break that off and stack as many of these as you want. Put the Mag 7 in there and watch the money flow and volume on the Mag 7. Either way you get it, you need to have market breadth for the day, right? Because we're looking for the catalyst or the reason that we could break out of either edge. And if you can spot the catalyst coming early when we get to the edge, instead of trying to trade the reversal, we would understand that we need to, go with the move instead of against the move. Right now, we don't have any reason to believe that we're going to get a breakout. So we want to be looking for what that is going to be. It might be 0-day flows, market breadth, commodities, treasuries, everything that I had mentioned. Right? So right now we're led with pot stocks. You do not want a rally day based on pot stocks or solar or nat gas. If any of those three are up there, that's trash. We don't want a market day based on that. Then we got precious metals, Bitcoin, staples. Definitely don't want a rally day based on staples. And that kind of breaks the whole growth versus value thing. If we've got value over growth this morning, that's not good. Kind of expected that after the new month, not front run in the end of the month. But you know what? It's just a little algo print. They're not even putting in any work this morning. See these little dashes? If there was actually a candle build out, that would be different, right? Like if we go to silver, you can see there's actually a candle build out here in the pre-market. Having just a little dash there is just an algo print. I'm not going to let that derail us at this point. I'm going to be keeping my eye on staples though today because, the whole dichotomy with the growth versus value thing is it's not that one has to go down while the other goes up, right? They can both go up at the same time. We would still be looking for value to outperform growth right now. That's what this is saying. And that's not what we would be expecting, right? I'm expecting the other way around. Expecting growth to be the outperformer and value to be the lagger, at least until the new year or in the new month. So that's a little bit of a standout. Like that old commercial with the three old ladies, and they're saying that's not how this works. That's not how any of this works. Some days it seems like that, huh? So SMH now down more than 0.5%. When we were looking at it on Thinkorswim 15 minutes ago, we were at like 30-something%. China now down below 0.5%. Mag 7 still sitting at, just a negative 13. That's a nice, clean little itty bitty pullback. Same with tech. We want to see those come back around. Chips, Mag 7, tech needs to get green, start moving to the upside. Otherwise, watch them to see if they don't keep moving to the downside. If they do, look for Bitcoin to start giving it up. Look for maybe staples to keep its bid and maybe give up more than 1% today. That would continue this move to the downside. All right, guys, 25 minutes, getting us some job numbers. And then at 10 o'clock, some home sales data, some auctions, and a couple of Fed speakers chipping their teeth, and it's a wrap, right? Watch the clock today. I'm not even really focused on these continuing numbers because they're really close. Unless they miss like crazy, that's not going to be my issue this morning. Yeah, I got issues. I'm watching that one. Gross domestic product. We'll see, right? The numbers say there's no problem. We'll see. The market must not think there's a problem, though, because there was no market maker move this morning, right? no market maker move. So they're not seeing any issues. So what I got for you guys, be careful, be safe, watch the clock. I'll see y'all.